Thank you very much for the kind introduction. You know, I actually have the most difficult job in the world because I am a Japan optimist. And you know, when you talk optimistically about Japan, you know, basically people's eyes start to glaze over. You know, of course, you know, lots of issues, but the nice thing is that after the collapse of the Japanese bubble economy, after Japan's plunge into deflation and a lot of banks having huge difficulty, you know, we now have had this sort of great leveler happening here. I mean, as you're all aware, you know, we did have this subprime Lehman shock crisis, and you know, we've come out of it quite well. The global economy did have basically a V-shaped recovery, but for all intents and purposes, it has put, I think, Japan more on a level playing field. Now, this is an outlook session. Before I go into the details of why Japan is going to make a good comeback and is something that is going to offer tremendous opportunities, particularly for the Australian business community, let's have a quick look at sort of the JP Morgan view of the world. I think it kind of mirrors, you know, what was mentioned earlier here with one little caveat. Basic global economic growth, you know, around 4%. I think that that's a good baseline to actually have, but a slight provider here that really pulling out of the Lehman shock, it really was the emerging world that did the bulk of the heavy lifting. We actually think that going forward, the industrialized world, particularly the United States of America, is actually going to be quite strong, and in particular this growth in America from 2.8% to 3.6% this year, driven by capital investment expenditure, that the world and Americans are actually investing in productivity, in the capital stock in the United States of America. You see also Japan growth around 2.5%. Conversely, you know, a little bit of a slowdown in terms of the actual growth rates in what we've got in the rest of Asia. If there is a worry, the worry is not growth, but the worry is that there is too much of it, particularly in the emerging world. In other words, that inflation could very well turn out to be a bigger problem than we are prepared to admit. Particularly here, I'd like to draw your attention to the fact that the People's Republic of China, we think, is going to have inflation rates of about 6%. Please be aware of the fact that 12 months ago, inflation in China was 0. Today, it is basically running above 5%. And it's not just food and commodity price inflation. You've got rents increasing at a rate of about 5%. You've got non-food prices also beginning to go up. I think you're aware of the fact that in the People's Republic of China, wage inflation is actually a very big issue, with the base pay increases that Chinese workers now get in the coastal areas upwards of 20%. And last year, we did actually have some very severe labor unrest that actually led to that. Where's Japan in all of that? Thank you. We've been doing rather well. You should know that of the listed companies, the companies listed on the stock exchange in Tokyo, that we've got about 1/3 of those companies currently reporting record profitability. This is very important. We actually do see, you know, that the improvement in corporate earnings in Japan is now beginning to lead into a stronger labor market. The unemployment rate is coming down. Job offers to applicants are improving. And on top of the cyclical improvement, we actually do have something nice and structural going on. Sayonara baby boom generation. The way a Japanese person gets paid is on the basis of seniority. That still is very much a fact here. This is sort of a schematic thing here. Age, how much you get paid. You see that here your pay basically peaks when you're around 55 years old, and then as you move towards retirement, comes down quite dramatically. What I'm saying here is that the baby boom generation, the Mick Jagger generation, so to speak, you know, did actually cause the bulk of wage deflation over the last 10 years. The good news is that these people are now out, and that we do have their children, the echo boomers, actually beginning to come in, and they are going to be experiencing over the next couple of years very strong wage growth. So message number one, forecast number one for YouTube or whoever else is going to hold me accountable, Japan's deflation is going to end this year because we've got wage dynamics that is cyclically as well as structurally in a very positive environment. Why Japan? What are some of the bigger issues? Well, that's the obvious reason, right? The young generation, is quite interesting. I'm always amazed that this year actually made it past the JP Morgan compliance team. But, for those of you who can read Chinese, we can discuss this later. Strongest thing about Japan is that this country never gave up, that this country relentlessly invested in exactly what was mentioned earlier here, productivity enhancing. This is R&D. I think this is the most powerful thing you can say about Japan. Throughout the 1990s, while the banks were bankrupt, while politicians were disastrous, corporate Japan continued to invest in the future. R&D as a share of national income is almost 3.4%. It is the highest of any of the OECD countries. Of course, you have to take out Finland, but Finland is really not really a country. It's more like a suburb of Tokyo. I find it quite amazing, actually, that you Australians, you seem to censor the American line. The American line is around here. The problem, of course, actually with American R&D is that about 60% is by the military-industrial complex, which means you and I can actually not invest in it. In Japan, in contrast here, 80% of the R&D is done by the private sector, which means you and I, as investors, can actually purchase into this good stuff coming forward. It's not just R&D spending. When you look at patent applications globally, people always tell me, oh my God, the People's Republic of China and Korea, they're coming to eat us. Well, no, they are not. Look at the absolute numbers here. Sure, China has made a big jump here, and that's catching all the headlines here. But for all intents and purposes, Japan is doing a phenomenal job, almost 30,000 applications here. It's simply a different league. Does it pay off? Well, I'm a poor banker. I'm not allowed to purchase one of these things. But this is an Apple iPhone. This is the most successful and most revolutionary consumer device that has come out over the last 6 years. Why am I holding this up? Well, big shock for Japan. When the first Apple iPhone came out, 0 components from Japan. Absolutely nothing inside this box that was made in Japan. The good news is that the latest version, the 4G version, 36% of all components of the latest Apple iPhone made by Japanese and can only be made by Japanese. Whether it's the battery, whether it's the touch screen, you've got a miniaturization revolution going on where once again the Japanese relentless focus on research and development has actually generated the technology that allows them to compete. Does it pay off for Japan? You bet it does. This looks at competition with the lowest cost producer, with the People's Republic of China, exports from Japan to the most profitable market in the world, which is not Australia, unfortunately, but it is America. You see, of Japan's exports to America, about 30% compete with stuff that can be made in the People's Republic of China. Now, look at this. When I show this chart to my Japanese colleagues, they always say, oh my God, those Chinese, they're coming to eat our lunch. Well, yes, 15 years ago it was 8%, now it's 30%. But the real issue is that when you look at the rest of Asia, you find that between 50 and 60% of the products already compete head-to-head with stuff that can be made in China. Bottom line here, Japan and China, not competitive. It is actually a wonderful coexistence that actually is going on between those countries. Japan's got the intellectual property, it's got the patents, it's got the technology. The People's Republic of China does have the market, and as a result of that, it's quite good. You see also, when you look at surveys, in the emerging world in Asia amongst consumers. You know, do you think this country's product is cool? Well, Japan is very cool. Let me give you a concrete example. Sony Corporation makes a DVD player in China and in Japan. It's exactly the same thing. When you go to Hong Kong, you find that the made in Japan DVD player, exactly the same look, same specs, everything. An engineer would say, it's the same thing. But of course, the Chinese girls say, no, it's not the same thing. I am prepared to pay a 15 to 20% premium for the made in Japan product over the made in China product. But overall, the reputation of Japan is actually very good. Corporate Japan, because we are actually very competitive, we continue to invest in productivity. As a result of that, yes, we are very dependent on what goes on in the rest of the world. This is the profit sensitivity of corporate Japan. A 1% change in domestic growth boosts profits by about 5 percentage points. A 1% change in global growth, woo, that's more than 3 times as much. Let me give you a concrete example. Honda Corporation has not made money selling a car in the Japanese domestic market for about 13 years. There's just simply too much competition, and the fact that the government continues to subsidize weak players, continues to give interest rate subsidies and loan guarantees, keeps excessive levels of competition, keeps inefficient players alive. That's the reason for why the profitability in the domestic market is so low. Maybe that's where there is a real lesson from Japan for the rest of the world.